Hi everyone, welcome back to my channel. Welcome back to another weekly analysis of the market. Hope you guys had a nice trading week. As always, let's begin with Dow. However, tomorrow I will be coming out with a stock related video for people who are interested in trading equity options or cash markets. You could give it a look. So anyway, to begin today, let's start with US futures. As discussed before the expiry on our last video on Wednesday, we discussed that until the US markets give a strong closing on a daily time frame between under 32,900 or above 33,700, we are not going to initiate any trades in that because that's a very noisy consolidating zone. So I'm not entirely bearish right now, and a lot of people would consider this as an engulfing candle. It could be because it is actually coming back from the upper end of the range, but not necessarily that we are going down to the downwards trajectory now. Let's just wait for Monday. Let's see how the markets react. This could be a profit booking because when you travel probably say 500-600 points and you close say 160 points, that's nothing. Like, that's a healthy necessary retracement. So anyway, I'm not bearish or bullish right now in the US markets. Until we give a daily closing on either sides, we are not going to initiate any trades. However, I found something very interesting that's directly correlated to our markets, and that's USD INR. And since the week's gonna start, I was looking at the weekly time frame. So USD INR right now is on a weekly trading in a very converging triangular pattern where it could break out anytime or break down for that matter. But looking at how the chart structure looks bullish right now. Now how you gotta understand these patterns is whatever it's called, right? Ascending triangle, descending triangle, wedge, whatever. But what matters is you gotta understand what's actually happening, right? Basically, the fall from the resistance is shortening, right? What I mean to say is you'll understand it in this sense, right? The first time the price fell from 83 levels, it fell all the way till 80, right? The second time it fell from 83 levels all the way till 81. The third time it fell all the way until 81.7. So every time there's almost like a significant higher low, right? So every time there's a higher low structure is bullish in nature. The pattern is looking bullish in nature, and we could be at the verge of a breakout or a breakdown. And either way, in the coming week, until you see an indecisive doji somewhere here, we could not see a lot of movement in either USD, INR or markets. But in any case, you see a bullish strong candle breaking these zones, which is the all-time high for dollar, right? USD, INR, we've never given a weekly closing above this. So if we start closing above 83 levels, it's going to be bad for our markets. We will definitely see a downfall considering the fact that we are trading near all-time highs. We might see a strong profit booking or a sell-off. However, if we tend to retrace back from the resistance and go all the way back until 82 levels, we might see a relief rally. We might see some more push where Nifty could take out all-time highs. So do keep an eye on the weekly USD INR, and I hope your chart looks like this because it's easier to track it that way. Now anyway, coming back to our mother markets, coming back to Nifty, let's begin with a weekly time frame. Nifty on a weekly really doesn't have much to say. I mean, as a trader, even if you've traded 50 years or 5 years, you could always be confused looking at a chart structure, right? So chart structure is broadly bullish because from a very strong support zone, the market has always gone up. We have taken support. We have significantly given a lot of green candles. There's some pause and profit booking candles over here. But Nifty does have space. In the broader spectrum, Nifty has space until 18,800 levels. But at any time you're holding longs right now, and the price does happen to approach anywhere between 18,600 to 800. Yes, it looks like a 1% range, but we are looking at a weekly time frame, and that's where the range is bigger. So anywhere between 18,600 to 800, it would be a good place to book your profits. Allow the market to accumulate or distribute or whatever. Give it some time to take direction. But this on a weekly time frame for a positional trader, 18,600 to 800 could be a range where you could sell off your longs. Now, when you break it down to a daily, daily has a very interesting structure right now. We had discussed earlier, any closing below 18,200 will definitely show us 18,050 levels, and that exactly is what played out on Friday. The markets did come down till the recent support, the recent daily swing till until 18,050, and saw a strong buying from there and closed all the way around 18,200. So that's 150, almost 1% recovery from the lows of Friday. That is a bullish signal. But broadly, the only hindrance on a daily time frame right now is this 18,230, 250 levels. Above which, if we start closing, then we are definitely gonna retest 18,400 to 450 zones, where we could probably make a double top or breakout. Whichever happens, we're gonna take a trade in that way. So for Monday, right now, if you're talking intraday basis, the two time frames we're gonna look at is an hourly and a 15-minute time frame. So let's begin with hourly. I have always expressed my sincerity towards the price following this channel, right? This parallel channel and on an hourly. And when we broke down, we have significantly broken down all the way from 350 to test 18,050 levels. So that's a 300 point fall. That's more than 1.5%. So now on a daily, people who are hourly traders, you guys, the three trade plans that we have is a flat gap up or a gap down. Until you see an hourly closing above 18,250 zones or an opening and sustenance above these zones, you cannot be long. That's the only long entry you get. Whether we open, sustain, or have an hourly closing above 18,250 is where we enter longs for the targets of 18,330, followed by the bottom end of this parallel channel around 18,400 levels, because after the breakdown we haven't seen a retest yet. In any case, the price has to further fall down. We could see a retest before we fall down, or if we have to go up, we'll jump back into the channel and then we have our next targets placed on the chart anyway. In case of a flat or a gap down opening, there is no sell trades until the market significantly starts closing below 18,000, where the 200 EMA on an hourly also exists with the horizontal support that's strongly important with a psychological level. So below 18,000, yes, we could go short. Now, people like me who like to trade 15-minute time frames, there's something interesting that I've been noticing. One thing, the food for thought that you could remember, if at all you're planning to trade intraday, rather than having 700 indicators and levels and supports and resistances on your chart, it's better to keep your charts as clean as possible. It keeps away doubt. It keeps away you from holding your winners. Because if you have supports and resistances drawn at every 50, 100 points, you will never have the courage to hold your trades. So understand how price works, understand where price is moving before you just randomly start sketching resistances and supports on the charts, right? So for now, according to my understanding, what's happening is after a very, very strong up move from all the way that, markets went all the way from 18,000 until 18,450, and now we've retested this zone. This is how price works. So on a smaller time frame, we have a very nice looking double bottom here, right? Allow me to illustrate how that looks to me. If this is the exact place from where the fall started, this was a very strong support zone. So we fell all the way down. We tested this trend line, fell all the way down, made a lower low. But in hindsight, when you notice, right, this looks like a double bottom, a W pattern, and any price movement on a 15-minute above the 200 EMA, the resistance and the closing of Friday, right? That's a perfect entry. And in any case, okay, now the three cases that we have to discuss is flat, gap up, or gap down. So how I want to express my thoughts on this structure is, it could look, there's another downfall before we could see a very strong bullish pattern, which what I mean to say is, if we open gap down, right, 30, 40, 50 points gap down, looking at global markets or however Singapore has been trading, if you open somewhere, say around this 18,150 zones, right, so the pattern's gonna look like this. Now this translates into an inverted head and shoulder, which is again a very bullish breakout structure, which will also align with the 200 EMA somewhere around here. So in any case, this pattern works out, it's gonna be a very good long entry, with our first target being around 18,350 and above which 18,450. So this is one way that it could work out. Now if we open gap down and we continue our journey down, then there's no, okay, personally for me as an option buyer, I see absolutely zero option buying trades as far as we are going to trade between 18,200 to 18,050. Yes, you could play a retracement from here, and that's up to you how you trade it. You play a scalp out, you play a trade, however you want to place your favorable risk reward. For me personally as an option buyer, considering my risk management, I would not like to trade between 18,050 to 18,200 because there won't be a lot of clear momentum. There might be a lot of hindrances on the way. So I don't like to trade such noisy places. In case of a gap down, we discussed, if you open gap down and break 18,200 in the 200 EMA on a 15-minute, we are definitely going to enter long above 18,230 for a first target of, if you are trying to scalp, for a first target of 300, followed by 350, followed by 450. Now, if you open strongly gap down on 18,000, we got to look how the markets actually try to play over there, whether they accumulate, consolidate a bit, and then start their upwards journey. That also will look like a variant of the inverted head and shoulder. And above 18,230, we're again going to go long for our targets. Now, if at all you want to play shorts, right? If at all you're interested in playing puts, long puts, the only entry, the only favorable risk reward and entry you would see is below 18,050, where our targets to book our shorts would be. The final target is definitely 17,800, and you could see some support around 17,950, some around 17,880. But in hindsight, the far away target where you could book your shorts below 18,000 is 17,800. So these are the levels for Nifty. Now jumping to Banknifty, let's begin with the weekly time frame. We had discussed how 43,633 on a weekly was very important. We had never seen a closing above it, and we managed to close. And this looks like an indecisive doji right now. But if you try to understand what's happening here, right? Markets have retraced all the way from 43,400 to close around 44,600 points retracement from the bottom end of the doji. And from 44,150, we are just 150 points away. So this, even in this indecisive doji, you see a lot more strength on the buying side from the bottom. We've seen a lot of buying from the bottom than selling from the top, right? So this for me is still positive in nature. A pause candle was required here to accumulate, consolidate, distribute, or whatever is going to be happening with the smart money, right? So on a weekly, anything above 44,150 is a strong bullish entry for even a positional trader. However, it won't be surprising if we see one more or two more weekly candles that consolidate here before a breakout, because this is the all-time highs, right? A direct straight line one-sided move from here will only end up crashing into a very strong downfall. It could be a trap. So the longer the market consolidates here, it's okay. Do not get frustrated as an option buyer. The markets are going to give us a chance either on the upside or the downside, and we are going to sit positionally in that, and we're going to make as much money as possible, right? But give it time. Allow the markets to give you a setup. Now on an hourly, Banknifty, 1 second guys. On an hourly, if at all you had plotted this trend line, the purple looking trend line, the markets on Wednesday as well as on Friday, both the days, have taken strong support from there. And it is almost like a double bottom even in Banknifty on an hourly time frame. How this looks like to me is, looks something like this, and if that's the neckline above which we are going to blast, we are going to see strong one-sided bullish momentum. But let the market give us a significant convincing closing, right? So how we understand the closing is, let's move it to a smaller time frame. Let's move it to 15 minutes, and on 15 minutes, as discussed, between the broader channel, which is this channel that you see, right? Between this broader channel, we have been just hovering within this channel, waiting for a stimulus, waiting for a market to break a range, to get some kind of news, some kind of, something that would give us a trigger to blast out on either side. This, however, this trend line, the lower end of the trend line, has been tested so many times, and it has always successfully given a very strong support zone, also aligned with the 200 EMA. This is the importance of confluence zones which I talk about. Whenever you see a very strong EMA like 200 with a very long time support interacting or long time resistance interacting, the most favorable risk reward would be to take in that direction rather than betting against it, because the probability of the support or the resistance being respected is always a lot more than it being broken. Always understand that. So anyway, from this other trend line that you see from the top, right, this makes a very converging triangular pattern which is narrowing down to its final bit, and it could break on either side to give a very strong one-sided movement. So now the three cases that we open, you'll be surprised, right? Like, why have I marked this zone? If this, okay, the three cases we are going to first discuss is a gap up, a gap down, or a flat opening. A flat to negatively biased opening could also allow us a retracement all the way down till this support zone from 43,950 to 43,750. So this zone that you see, right, this zone between the two parallel channels, between the two triangular channels, it is a no option buying zone. And I will also explain to you why this I consider as a no option buying zone, right? First, in a flat to negative biased opening, we do not trade. We wait either for the higher end of the channel to break or the lower end of the channel to break. In any case, we open strongly gap down, we might find support here. If we don't, and if we happen to break the 200 EMA and the parallel channel that we are talking about, our fixed entry only lies below, 1 second, our fixed entry lies below 43,600 zones for a positional short, right? A short without hindrances, without noise. Below 43,600, we short the markets for the first target of 43,470, 480, below which we have 43,350. So these are the two short sides. If you ask my personal bias, I am bullish, so I will be looking for long-sided trades for a setup that could be long in nature. Now, why I deem this zone, right, from 43,980 to 44,150, around 70-80 points ka range, why do I deem this as, 150-160 points ka range, why I deem this as a no option buying zone is, because if at all you're going long here, right, if you're going long here, for a risk, for a reward of around 100 to 150 points, if this could turn out to be a fake out after the opening or a first candle, if your reward is 150 points, your risk would be around 250, 300 points. So you are trying to play a 2:1 risk reward, which is horrible in nature, which could lead you to blowing up your account, taking trades like this and getting used to them. So avoid bad favored risk rewards. However, a clear long that I see to be perfectly bullish, to have a strong position sizing also to be bullish, is if we see an opening, a breakaway gap, and opening above 44,150 with the first 15-minute candle low not breaching 44,100 zones. That's a perfect long entry. That's a breakaway gap, and markets could propel all the way up till the upper end of the channel, which is 600, 700 points away, right? So that's a perfect positional long. Now, in case of an opening anywhere between this, we are not buying until we see a breach on this side, or there's one more scenario, right? The last scenario I'm going to discuss with you is, for example, we open around these zones, right? So that is considered as a break of the channel that's pushing the market down. So this sell-off does not necessarily need to go all the way till there, right? That sell-off could actually, in hindsight, be a retest of this zone, consolidate, and then eventually break out. So this structure may we have an entry above the same 44,150 zones. So that's one more. So the three cases that we've discussed is opening between 43,950 to 43,750, non-tradable. Any retracement from 44,150, a gap up opening, to a retest and again breaking the structure is bullish. Above 44,150 we are long. Any breakaway gap opening above 44,150 and sustaining for the first 15 minutes above that is strong bullish. So my bias is bullish. The trades I'm looking for are bullish in nature. However, as an intraday trader, your responsibility is even to trade the short side, and we have levels marked for that. So anyway, all the very best for your coming week. I hope these levels help you out. Kindly do like, share, and subscribe to my channel, and share it with all your friends and aspiring traders who would need help with levels and zones on the intraday charts. That is the whole purpose of doing this. And besides that, all the very best. Manage your capital well. Always take the risks. You know the end that they lead to. And I'll probably see you guys tomorrow with the equity video, and we'll start our Banknifty and Nifty analysis from Monday again. So all the best. I'll see you guys in the market on Monday.